Welcome to another episode of Commercial Property Roadshow. You're here with Helen Tarrant, and today I'm going to share with you the difference of buying a commercial property business to a commercial property investment. Now, I get emails about when there's a yield that is astronomical. People email me and go, I found the best deal. And then you realize you're actually buying the business and not the actual property. So it's really important to identify the difference. And it's interesting. I want to show you this case study because this popped up a couple of days ago. I'm always trying to bring you something new in the market, and it's business as well as the freehold for sale. But because the business is being sold for 450,000 and the actual property is being sold for 2 mil, there is for a lot of people, there can be a lot of confusion, especially first timers in the commercial property industry, first timers buyers. You're looking at something where they go, oh, look, the rent is 87,000 and the asking price 450, and it's all listed on Real Commercial. It can be very, very confusing. And you're thinking, wow, I bought something at 21% yield, right? And it talks about the lease, it talks about the turnover, and you just get confused, right? It talks about the restaurant, but also the freehold talks about the restaurant as well. So I want to share with you the difference. And there's nothing better than actually show you something in real life. So let me take you and share screens with you. I'm going to share with you in the beginning the actual property, as in the freehold property. And then I'm going to show you the ad for the business and how they're significantly different. And that when you go looking for the property, it's important to look, there is a difference, even though they're listed on the same website, there's a slight difference between whether you're buying the business or whether you buy the actual property as investment. And when you buy the property, you'll see that the yields are slightly different to when you're buying the actual business. So come with me and let's get started. All right, so this is number 1/7-9 Bay Lane, Byron Bay. So this is also something about when you are looking in the market, you've got to be realistic. Right? Byron Bay is one of the hottest markets in Australia for commercial property, for any type of property. In the last 12 months, it has boomed probably 3-4 times property prices. It's the new Hollywood of Australia, right? So when you're looking at this, and the first thing I immediately think, I look at this and I look at, it's a fish and chip shop, and it's quite a bit of an outdoor, bit of indoor. You know, the kitchen's a little bit dated, but still good. It's in a good area. It's near the beach, and I see it. I say, look, it's really a casual dining place, and it looks like it's probably going to be a great place for people to relax it and have fish and chips, right? It's selling for about 2 mil, which is roughly anything in Byron at the moment is around 2 mil. So for me, it's right about the right price point. The floor area is only 65 square meters. Well, that's just what it is. We see the location very close to the beach, and we're seeing the price change. Investment opportunity on Byron Eat Street. Now it's talking about 65 square meters. We've got a 3-year lease with 2 by 3-year options on a strong lease. Obviously, we don't know the history of the tenant, and it's located in the Busting Lane, so we know it's a laneway, and it's a highly held blue chip location. Now, if you know where Byron is, it's near the beach. The demand of being somewhere near the beach in Byron is huge, right? There's so many things you could do with this. If this tenant does leave, you know, you're going to end up, you get up with a new tenant. A yield in Byron at the moment is 4 to 5%. And this property, based on the net rent, is about 87,000 net rent. And that property is yielding about 4.5%. So that's about market yield, right? And so if you're looking at this, this is a commercial property investment. You're buying this, it's a set and forget passive income, right? You are going to borrow 65% against the lease, and you are going to, after outgoings and after mortgage, you're going to clear some passive income in your pocket immediately. Not that much at 4.5%. But you'll clear a margin 1.5, and of course there's capital gains, which is why you're buying this property. You're buying this property for capital gains. You're buying Byron at the moment, no cash flow, pure capital gains. Now, interesting thing is, at the same time, there's a listing. So let's have a look when this listing comes up. It's hard to tell sometimes because they don't put enough information. But this was updated on the 22nd of November 2021. So it could have been sold. It could still be here. What's interesting was 2 days ago, the business also listed on Real Commercial for sale. And this is where people who have alerts for Byron, who have been looking in the area, get alerted to this and say, oh my God, we found a property that's yielding 19%. Well, a property does not need to yield 19% in Byron to get sold. If it is a COVID business or if it's a fire sale, they don't get 2 mil, they can get 1.8 and they'll sell it tomorrow. So you got to be, when you do this, it's not a bargain. You got to look at what it is that you're actually, what is it that you're actually buying. So let me share with you the actual business, just in case. So we can see that this one here looks very, very similar, right? Here we've got the Fishmongers, Byron Bay, 9 Bay Lane, right? We've got exactly the same photos, right? It's not like we're seeing anything different from that, right? So it can be very, very deceiving. And then we go down and it's asking 450,000, including GST. It's talking about it's 70 or so square meters, so not that different from the other ad. It's zoned in residential. I don't know why. It's called, instead of it being a business, they're calling it a tenanted investment, and they're putting a return of 15%. So anyone putting in different markers, like different filters on real commercial, is going to come up with this ad. And they've got an estimated income per annum, 64,000. Got one tenant. It's fully leased. So it looks like a commercial property listing, something for the actual property, not the actual business. We've got the location, but then when you go down and you read it, it actually talks about the restaurant. When you get a commercial property listing, they don't talk about the restaurant so much. They just talk about the rent, the yield, location, the lease terms. This one actually talks about the restaurant. The spiel is about the restaurant. It has been delighting locals for 20 years. It's just, Byron Bay Lane's just a hop, skip away. It's near the main takeouts, committed to local resources. On top of that, provides great atmosphere. It's a high volume business with long lease with options till 2028. And that can also be confusing as well. If you look at it, you go, wow, I'm buying you're buying the tenant. It's actually talking about the tenant. It's got long leases, but it doesn't realize that it's actually talking about the sale, the business being sale. It's been offered for sale, but this is the bit where most people miss. It's been offered for sale as a turnkey business with owners involved in running the restaurant on a part-time basis. Now, most people in their enthusiasm would have probably missed this. Great news means that you can dive right into it, start reaping the rewards of a high volume business without the guesswork, right? So it's the current owners have also recently gained approval to extend outdoor dining for up to 20 people, which is a great initiative, right? So you're looking at this going, wow, this is a great business, and you think you're investing in the property, but you're not. You're actually buying the business. And what is more is that, and I want to share with you the IM, is that the IM looks totally different. So we've got an IM, it's very deceiving. It looks exactly like an IM you would get for the actual, and I don't have an IM for the actual for the commercial sale, but for the IM for this, it's, was completed in December 2021, which is interesting because it's only listed 2 days ago. So you don't know if the vendor actually owns the freehold as well as the business. They might have sold the freehold, which is the building, and then they're selling the business. But it talks about executive summary, how big it is, and it talks about the current lease term with options is doing 87,000. It's probably a gross lease for sale and it's zoned residential. So because it's in a residential block, it's for sale for 450. You take that and you don't know whether you actually, for most people, they think they're actually buying the property, right? But you've got to be realistic. There's no way you will ever buy shopfront right now in this market in Byron Bay for 450,000 unless that shopfront is like 5 or 10 or 15 square meters, right? Or it's an office space, right? So 450, that kind of shop, something that's paying that rent, that's not going to happen. It's got the location, and then it's got some photos which we've already seen online, and then it talks about the profile of Byron, and then it talks about the restaurant analysis, not about the property analysis, but the restaurant analysis. This was a real IM for a property. It would talk about the property, and it talks about how then it gives you the gross turnover of the business, and then it has 4 staff members. So this is interesting. This is worthwhile information if you're actually buying the property. If you were buying the property itself and you had this for sale, you had the business for sale, and you could pull out that information about how much profit they were doing, then that would be great for you because you'll know whether they're able to meet rent. But at the moment, you can see that the profit in 2019 and the profit in 2021 are startling different. They're doing less than half, 40% of that. So this business has been impacted by COVID, and that if they're paying $87,000 in rent, that rent is actually too high in comparison. And it's probably one of the reasons they're selling. And $450,000 is a lot that they're selling for, right? But you can see here that that's the gross profit. And that's really the telltale sign of the difference between a commercial property business and a commercial property, actual property that you're investing in. Now, commercial property businesses can be profitable. Sometimes you have to buy the business with the actual property. That's in areas like self-storage, which we've done a couple of deals on. Some of our clients have bought in self-storage themselves, where the business is linked to the actual building and you actually buy them as a whole. It's harder to separate, but when you separate them, you can take overhead leases and things like that. There's also things like motels and pubs where the actual license and the operating license of the liquor or the actual license and the business is actually very closely tied, management rights and things like that, very closely tied to the actual property. So it's hard to separate that, whether you're buying the pub as the owner of the pub or you actually buying the actual business, because if your tenant who decides that they no longer want to manage the pub vacates, you have to find someone else to come in. So that's also the difference as well. So this is where you've got to be careful when you're looking at what you're investing in. One thing to look at is market yield. Is this property sitting above market? Yes, if it does, that's fantastic. You've got yourself a bargain. But is it unrealistic? Because this one, based on $87,000 in rent and $450,000, that's a 21% return. Well, it's not real in Byron Bay, right? So you've got to look at that realistically. Secondly, you've got to look at the location of what it is and how easy it is to separate the business from the actual building. I mean, it's great to have a tenant that's attached to the business. So a vet, an allied health tenant or medical type tenant, or even a last industrial warehouse type tenant will be fantastic for it. But you've got to make sure that at the end of the day, there is a clear separation. And then thirdly, you've got to look at market returns, location, and realistic expectations. Yes, we all want to nab bargain. Yes, we all feel a little bit greedy in this market, trying to get something a little bit extra ahead of the market. But when you're seeing something that is too good to be true, maybe it is too good to be true, and you need to delve deeper into it to find out exactly what you're buying. Now, you can, like a laundromat, right? Buying the property with the laundromat in it actually makes sense, right? Because you make the most amount of money. Some businesses and the actual property needs to be tied in together, and you should look at buying both rather than one or the other. But certainly, if you're a first-time commercial property investor, you are make sure that you're looking at investing in the actual property and not the commercial property business, and it can be confusing. So if you're looking for help, guidelines, strategy session on how to get started on your first commercial property, make sure you're picking the right property at the right returns. Then reach out to me, helentarrant.com, and jump on a strategy session. Subscribe to this and make sure you leave me some comments and let me know what other topics that you want me to cover. And I'll look forward to seeing you at the next video. Bye for now.